Good morning, everyone, and welcome to the Quantum Leap pre-market homework session and trade plan setup for Tuesday, February the 28th. I'm sorry, February the 18th. I want to get ahead of myself there. I hope everybody had a great weekend, nice long weekend. If you're visiting us from Twitter or watching this video on YouTube after the fact, this is Quantum Leap. We are a self-organized learning environment. We've been running a Skype chat room for quite a few years now, and it is a private room, but if you do want to come in and check it out, you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And of course, my Twitter names are at Crazy2, aka Quantum Leap Trading, or my new one, which is the Stealth Analytic, which I'm going to be moving over to in the next short little while. Anyway, each morning we come together to do our homework and take a look at the markets and set up our trade levels. And we do this on a daily basis in a live go-to that you're watching. Now we do start with some basics because we're getting prepared to trade. So we start with the macro to the micro, and then we gradually work our way down to some more in-depth chart analysis, and then we set up our levels for the day. We do have to get the legals out of the way, so this information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures, any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan. So usually we start taking a look at the numbers, but I want to just start a little bit differently this morning because I think that this is significant. And we like to look at the macro to micro, so we're going to look at the macro to micro in terms of, the commitment of trader reports. Each Tuesday, data is compiled and put together and put out on Friday on the net positions of three different main categories. Small specs, which is your retailers like us, large specs, which are your swing traders and fund managers, and the commercials are the big paper. And we track them on a daily basis in our homework session, I should say on a weekly basis because it only comes out on a weekly basis. And just to watch for where everybody's positioned. You can see this line right here is our zero line. And you can see that both the large spec and the commercial paper are net short, and even though the market has been going up, they've been getting short, and you can see that the small specs are still net positive. In fact, they're getting more net positive as we move higher. So this is indicative for what I look for in terms of a possible blow-off top. So we have to worry about the fact that we've come up almost to the all-time highs again, and we're back up into that balance area around 1832 and a quarter. But we do have the large spec and commercials net short. My hypotheses, based on what we're seeing here, is that the commercial and large spec have left the retail to be the bag holders, and that they're going to sell into this rally, and that this rally is going to be somewhat short-lived and spike up, go up and make a new high, and then how high it goes I don't know, but I think it's going to be short-lived, and then we'll see a larger correction that we've been anticipating. So let's go back to just taking a look at the numbers. Of course, we were a holiday yesterday, so these holiday sessions are always marked on our sheet in this color to show us that it wasn't a full day. And then remember, nothing settled until tonight. Everything from the Globex on Sunday night open through till today. So really no day. But I mean, the key levels to keep an eye on, obviously 1837.75 is our year open and determines whether or not we're in a bear or a bull year. Currently we're trading below that, coming down to that 1834 CLVN, and so we still have tried to get back above in the holiday sessions. We tried to get back above the year yet again, a year open yet again, and we failed to do so. Our month high is this 1840 and a quarter. That was put in this what I consider the holiday session from Sunday night on. You can see that the month high has been trending up. So the trend is still pretty powerful. You can see all your Globex numbers, except for this one day, again trending up. Yesterday we didn't really have a full session, so we're not really tracking it. But I'm just tracking, the fact that our value areas and all of our key levels that we watch are continuing to trend up. Going over to the daily report, the actual overnight Globex high is 1839.75, and we do have that naked VPOC there, but I always mix when we get these holiday sessions, I always look at what's the highest high during that holiday session, and that's 1840 and a quarter. So I'm using that for our full session high right now, even though it's kind of weird with the three sessions that we've had so far. And then our full session low, same thing, 1831.75. So our ATR targets right now, based on the time from Sunday night opening until till now, is 1856 and a quarter to the upside, 1815.75 to the downside. Now we did have a little bit of news. Just at 7:30 we had the Empire State Manufacturing Index, and that caused a little bit of a hiccup and moved this down to go down and test that 33.75 area again, but they popped back up and they're above that 34. This is what we call our QLTP. This is a sheet that is derived from the homework sheet that you see Howard and I working off every day, and we put this out into the Quantum Leap room each night. And what it is a ladder above the previous day close and a ladder below the previous day close with all the key levels that we're looking for. In fact, in Moscow's Man, I did a bit of a dissertation yesterday afternoon talking about the fact of why we need to have different methodologies in order to become and create an efficient auction and efficient marketplace. But we don't necessarily trade all these different methodologies, but we do track them so that we can understand where other traders might perceive value and take a position. And we want to know that. So we put that out based on the stuff that we watch, and also has an area for news, an area for working. And the new sheet that's going to be coming out very shortly is going to have our three main hypotheses put out on a daily basis as well. So really trying to build value for the sheet itself and make it really useful. But let's take a look at the macro to the micro and see where we are within the trends. Take a look at a couple charts that I'm watching. Let me just get out of here. So on the monthly, we've got good slope and separation. We came down, tested the 9 EMA, trading back in the upper distribution from the last 2 months, and very much the trend is intact on the monthly. And on the weekly, we had that weakness coming in. It looked like they were going to break below and close below the 20 SMA. They didn't. They closed right back above it, and now we're starting to get slope and separation again on the weekly. So the weekly trend is still intact. On the daily, you can see that we've got a very powerful trend going in the daily after coming down and creating these two technical gaps and closing them now. We closed above the 9, closed above the 20, and now we're getting slope and separation. We've got a technical gap right here. Right now, to close that technical gap is going to bring you in down around that 18, and I think it's actually going to be that 1818 level, which is going to be a key level. And then we got this naked cross on the daily at 1794.75 again. And the naked cross is something that proprietary study that I developed a few years ago, and this has a very high probability of being closed. We watch them more on the 30, the 15, and the 5-minute for intraday trading, but we do watch them on larger time scales. Just want to jump over to the geometric chart here for a minute. You can see that last week I added this third fork. We took the smaller intermediate fork out, and I added this new fork. I'm probably going to make an adjustment on it again, but there's 3 forks on this page. There's the upward sloping fork, which is a long-term fork that we've been following for quite some time. Then we put the opposing fork in several weeks ago, and then we've added this new fork, and it's probably going to have to reconfigure everything here. But the key is we've got our trading back inside of the lower channel of the long-term upward sloping fork, and we've broken out of the upper channel or the upper line of the downward sloping fork. One of the reasons I put this fork in, I wanted to have a measuring point on where we might go if we broke out. We talked about this on Thursday, and we went up and tested the upper line of the new fork, and currently are trading inside of that. We do have an energy point that is due to get hit on the 25th at the 1817, 1818 area. Again, that's a very key area for me, but it does give us time to go and go through my hypothesis, which is blowing off the top and creating a new high, and then a quick retrace back down. And just watch this level right here at 1842. If we break above that, I think you can anticipate and take the trade into creating a new high. I tested the upper line of the downward sloping fork today. Will take us down into that 1821.25 area, and a test of the lower line again of the long-term fork will take us down into 1807. And I'm not anticipating that move today. Really, I'm watching this line right here. So let's take a look at where we are in terms of the intraday trend coming into the marketplace this morning. Then we'll get to the composite charts. On the 4-hour, we've had the strong trend up. We had a little bit of weakness, but we didn't close below the 20 SMA. Pop back up and continue the trend. We are losing some slope and some separation going sideways as they starting to build energy and consolidate in this area for the possible move up. Doesn't mean that we can't have a retrace, and I've got a couple areas that I'm looking for a probable retrace as well, because we have had some accelerated moves on the daily, and we are getting a little bit stretched out. Going down into the 30-minute, again, much more convoluted, much more consolidation on the 30-minute, and no real trend on the 30-minute. And just go down one more to the 5-minute. And on the 5-minute, we've been in this downward trend, for the last hour or so. Created a bit of a technical gap. Actually had a tech gap, Mr. Sneaky FUBAR set up right here. Anyway, it's over, so it's no big deal. And then we closed above the 9, but now we've broken back below. So again, no real direction on the 5-minute. I think we're going to get a very choppy open personally. So let's go take a look at what that looks like on the big picture. So we have these three main balance areas that we've been watching. This area down here, in around the 40, 46, 47 area. Then we have this balance area in around that 1781.50, and then we have this balance area up around this 1832.25. And we've broken back up inside of this balance area up here in this distribution zone on the composite. And the key levels to pay attention to is you've got this 1832.25, which is the most accepted price within this balance zone, which is the MCVPOC. But we're inside of the value area, and the value area, which is basically your one standard deviation, or just I use 70 just for simplicity. 70% of all the value. All the volume is within the value area, and the value area high right now is this 1840.50, and the value area low is this 24.75, and we're inside and accepting value right now. So we could retrace a 50% retrace of this candle right here will bring us down to 1830 area, or more specifically this 1828.25. But we've had this big move up, so it wouldn't surprise me if we come down a little bit deeper. And I'm really watching this 1824.75 value area low. But even drilling that down, I could see some some push through to this 1823.25, which is a microcomposite LVN. And then if we get below that area, it's still within the trend to come all the way down. You can see that we found value in these 3 days right here. They accepted value in around this 1814.50, 1814.75. But the real number that I'd be watching below us, and the key line in the sand right now is this 1806, because even everything down to that 1806 still keeps this trend and this move up. They just might have to come down and test the other side of the larger balance. So there's three key levels I'm looking at below us right now. It's the 23.25, the 1850 area, and this 1806. Below 1806, then I'm really going to start thinking short again, because I think we're going to have a bigger move. You can look at the 91.75, but I think we have to come back down into this 1781.50 area. But if we can hold 34 today, and with some decent volume, then I think we'll push up to try to take out that holiday high at 1840.25 and this CLVN at 1840.50, and try to test this value area again. And then if we can get outside of value, I'd look for a quick move up into 42, and then obviously my main hypothesis, which is to go out sometime this week. Don't know if it's going to be today, but sometime this week, with them being this this close, that we take out that year high at 47.75 and then the all-time high at 46.50. So let's take a look at what has transpired overnight and put our levels over. Of course, we've got the 1839.75, which is the Globex from last night open, but I'm going to be using for my overnight session high the holiday high, which is this 40.25. The reason I'm doing that is we have this naked VPOC here already at 39.25. So I think that's the target, not necessarily this 39.75, because if I think they go for 39.75, they're going to go for the 40.25 anyway. So I'm looking at 40.25 as the more significant of the two numbers. And then the holiday low is the same thing. We've got the 32.25 from the Globex, but the holiday low is down at 31.75. So I'm going to be using 31.75 as the number, because I don't think that the 32 and a quarter is, if they come down to take out the overnight high, I actually think you can test the 28 area, which I'll bring up in a second. And then the overnight Globex is currently sitting at 1835.75, which is just above the Friday naked VPOC, and very significant level on the composite. So let's just take a look at what that looks like. You've got three main distribution areas. We'll call it four main distributions. You've got the 42 area. You've got this 36 and a quarter, 35.75 area. These two CHVNs, and then you've got the VPOC, microcomposite VPOC at 32 and a quarter, and then you've got this 26 level down here. But I'm really watching this 28 as a warning shot across the bow, so to speak. So in terms of what's going to happen on the open, we still got 25 minutes, but if we can hold above this 34, we're going to be in this upper distribution, and it's really defined, by both the CLVN and the LVN from the upper distribution from Friday. So this is going to be a main trade area for me right here at 34, because if we get below 34, I'm looking to come down to the microcomposite VPOC at 32.25 to find buyers, and will likely push lower to this 31.75 and take out the holiday low, which I'm calling the overnight low, and take out the 32 Globex low. But below that, you've got this value area low from Friday at 29.50, and that's just above this 28.75, and there's actually an LVN there. So I'm going to use this as a trade area down here at the 28 and a quarter level. I'm going to be using 32.25 as my first target below the 34 level, with a possible push through to take out the overnight low. And my secondary target is going to be the value area low down here at 29.50. Come on. Always having trouble lately with this. Drives me nuts. All right, with a push through to possibly test the CLVN at 28 and a quarter. Below 28 and a quarter, next level you got to be looking at, and the next extended target below is this 25.75. And then a move below that to the range low will take us down into this 22 area. There's another CHVN here at 20.75, but it's the range low from Friday that I'll be looking at and seeing if we get responsive buyers. That's not my main hypothesis. My main hypothesis is to hold above this 28, open up in value and in range, and chop around, take out the naked VPOC, test that 34. That's be the first area that I'll be looking for buyers to step in, and if they can hold there, then I'd be looking for a rotation back up to test the value area high at 38 and a quarter, and a push to take out the naked close at 39, the naked VPOC at 39 and a quarter, and the overnight or holiday high here at 1840 and a quarter, and take out and test the other side of balance here at 40.50, the CLVN and the microcomposite value area high. So my main target above is going to be this 39 and a quarter. So I really, if I can't get a trade off of the 34 and then a rotation up, the first area that I'll be looking to to do business is this 38. I was thinking 37.75 the year open, but I really want to see them win that battle, so I'll be looking for them to break out of the value area to take out that 39.25 and that 40.25. So my first, call it a trade area and a target, will be this here, and we'll make this our secondary target at 40.25. And then the extended target, is still up there at 45.75 and 46.50 and 46.25. You've got the year high, a gap open, and an open gap, and the all-time high at 46.75. And then the ATR target, which will be our extended target, is up there at that 56.25. And I'll adjust the name. I'm running out of time here. I got more stuff I want to talk about. So again, main hypothesis is to open up and chop, come down and test this 34, hold 34, and rotate back up and take out the targets to the top side. Secondary hypothesis is to open up and chop, probably test the value area high, maybe even come up and test and take out this 39.25 and the overnight high, then have responsive sellers step in and take us down back towards that 32. And then the third hypothesis is we get a selling flush, and we break through that 34, take out all these lower targets, and come down and test the lower side in around this extended target at 1826. Pretty simple. I think that we're going to hold value, but we do have to see if they have to come down to find buyers with more conviction before they get this bigger move to the top side. Taking a quick look at the Keltner and Renko chart, a test of the Keltner center line is that 35.75. That is the most accepted price in this distribution up here, and you get the naked VPOC from Friday at 35. A break below that and a test of the lower Keltner line takes us down into that 1829.75, 1828 area, and that half back on Friday's candle. Midpoint on Friday's candle was what? Why is my midpoint not showing up? Somehow it got taken out. I'll have to fix that. And then if we hold above the Keltner center line, a move to take out the test the upper Keltner line will take us up into that 1841 or that next CHVN up there at 42.25. And that should actually be a target there as well, 42.25. All right, so that's what I'm looking at in terms of the ES. Now, last night I drew a picture and posted it as this whole gold pattern that's setting up, and this is what actually got me thinking about all this confluence and of the different methodologies. So we've been tracking this. If you've been in Quantum Leap or in the homework sessions or watched the videos, you know that we've been tracking this bottoming pattern on gold, which is a descending broadening wedge. These are very powerful patterns. They generally lead to much bigger moves. And as we came down and tested and put in that double bottom down there at 1179.50, it actually was in the process of coming up and testing the upper line and breaking it, coming up and creating this potential cup and handle formation. Not only that, is it came up, and it is a lower right rim to what would be the left rim, but the reason I drew it out just to check it out doesn't mean that we can't go up and have more of an equal rim, but because of the fact this is the 61.8 retracement off of this 1434, and I can't edit these. I realized after I posted it that I put double fours in there, but it's 1434 area is the 61.8 retracement from that swing high to that double bottom is the 61.8. So I would anticipate that there would be Fibonacci traders that would step in there and hold us, which means it could be the right rim, okay, of this developing cup and handle. And to validate that, we've got to come down to this 38.2 retracement, or just around that 1278 area, all the way down to this 1240 area. And so we could get this pullback, which would be completely normal. And then there's a couple ways you can trade this. You can trade, if we break the 1300, I would look for the move down to validate the handle, and you could ride that down with targets just above this 38.2 retracement, or somewhere above the 61.8. Now the interesting is that 61.8 is the microcomposite VPOC. So let's take a look at what that looks like on the composite chart. You can see that this area right here, the larger microcomposite VPOC, is all the way down at that 1240.70. And if you remember, I mentioned that we kind of blew out of this balance zone without creating, we did create value, and accepted value higher at this 1258.60 area, which is from that prior microcomposite as well. But they blew out of this pretty quickly. So, and they just went up and hit all our targets. The main target above, remember, was that 1315 area, and now we're up here and we're trading in this upper distribution. So what I would be looking for, but we are seeing a little bit of weakness coming in. Again, doesn't mean that we can't go up and create a more equal rim on this cup. But knowing that this is the 38 or 61.8 retracement level from the big move, I would be looking at the possibility of coming down and testing this 1300. But if we break that 1300, then I'd be looking for that move down into this distribution area there to validate and create the handle. See if we can push all the way through down to that 1240 area, which still validate the handle, and then find buyers and make a move up to break the right rim. And the measured move on this is, I'm using 1434, but the actual measured move is actually higher. I think it's like 1390 area. So the two that I'm watching above us right now is the I'm sorry, 1386.90, and then the 1414, and then the bigger move above is up here at the 1468.50 area again. And I know that's a big move right now, and I'm not anticipating to happen overnight. These daily cup and handles can take a while to develop, the same way as that daily descending broadening wedge took a while to develop. But when they hit, okay, they can mean big moves and big measured moves, and you want to try to take that ride up. So in terms of trading this today, we're trading 1322.20. I'd be looking for a possible rotation back down to this 13. If it gets below 13, then I would take a trade from there. Or if we come up and we break above this 1337.25, then I'd be looking to push through to this 5160 area to test the larger other side of balance around this distribution. But my main hypothesis today in gold is we chop around in this area with a slightly lower skew. We've got a couple naked closes that have to be taken out down here, and we've got a couple undetermined fair value here at 24 and 15 area, and that 09 area again, and then the big line in the sand being this 1299. But I'm anticipating just a lot of chop today with a push downward back towards that 1,300. Whether we get to the 1,300 today is a whole other question. And I know I've taken up a lot more time than I usually do. Howard, is there anything that you want to share? I know we've got about 10 minutes before the open.
No, we'll go ahead and wrap it up now.
All right, so this is going to conclude our morning pre-market homework session and trade plan setup for Tuesday, February the 18th, 2014. As always, trade well, trade safe, and we'll catch you on the flip side.